The phrase emergency fund refers to money set aside for use by individuals in times of adversity. An emergency fund's goal is to provide financial security by providing a safety net that can be utilized to cover unforeseen costs like medical bills or other unplanned expenses. Cash and other assets with high liquidity tend to make up an emergency fund. This lessens the need to deplete retirement savings or jeopardize your future security by using high-interest debt options like credit cards or high-interest loans. If you are in debt, having an emergency fund might be extremely crucial because it can prevent you from taking out additional loans, sinking you deeper into debt. Everyone should set aside money for unforeseen expenses. Having a reserve can make all the difference between surviving a short-term financial crisis and incurring significant debt. Those who had accumulated money for emergencies during the pandemic, for instance, had a smoother transition than those who hadn't put anything aside. In this video, we are going to help you prepare for such unforeseen situations by informing you on 1. How much money you should put aside in your emergency fund. 2. How you should build up your emergency fund, and 3. Where you should save up for an emergency fund. But before we delve into these 3 points, hit that like button and subscribe to our channel for more informative content. Your support will go a long way in helping us grow the channel and, most importantly, help you grow financially. Number 1. How much should you put in an emergency fund? Your financial condition, spending habits, lifestyle, and debts all play a massive role in determining your ideal emergency fund amount. Many financial experts advise their clients to set aside money for at least 3 to 6 months worth of spending, which can help them weather a small medical expense or a brief period of unemployment. You could require more money set aside if you freelance, work seasonally, or if it would be difficult to find employment elsewhere if you do lose your work. It's a good idea to start another savings account for irregular but inevitable expenses, such as vehicle maintenance and vacations, once you've reached a fair threshold or exceeded the target in your emergency savings account. You can also decide to invest the additional funds in an investment vehicle of choice. Number 2. How should I save my emergency fund? To save and build up your emergency fund, you must first know the total amount of money you want to save. Remember that this amount is determined by your 3 to 6 months worth of living expenses. Once this figure is known, work towards developing the habit of saving regularly. For those living paycheck to paycheck, try setting a comfortable amount aside that can be diverted automatically to your emergency fund account. For freelancers or seasonal workers, you can set a comfortable percentage of your earnings to go into your emergency fund account. For example, a freelance video editor can set aside 20 to 30% of their income for the emergency fund. Another useful way to add to your emergency account is by saving your tax refund. Tax refunds are payments sent to taxpayers who have overpaid their taxes frequently as a result of excessive withholding by employers from their workers' paychecks. Nearly 3/4 of taxpayers, according to the U.S. Treasury estimates, have their taxes withheld excessively, resulting in tax refunds. This money can be diverted into your emergency fund to help cushion you further. Number 3. Where should I save up my emergency fund? Since emergencies can pop up at any time, having immediate access to your emergency fund is crucial. Having a high level of accessibility, therefore, requires that these funds should not be invested in long-term investments. However, the account should be separate from the one you use often, so you won't be tempted to utilize your reserves. Another thing to keep in consideration is the ability of the emergency fund account to accrue high interest over time. A good example would be a high-yield savings account which is insured by the government and can be accessed quickly whenever funds need to be withdrawn or transferred. So there's how to set up an emergency fund and have yourself ready for any unforeseen situations. Remember to keep track of your emergency fund and to make any necessary adjustments, especially if you recently took funds from the account. If you enjoyed this video and this kind of content, give this video a thumbs up if you hadn't already. And subscribe for more videos like this. With that said, have a great day and see you on the next one.